And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, looking at the indexes, commodities, currencies, gold, anything that's grabbing our attention from a company perspective, interesting charts, break it all down, analyze it so that you guys can better run your daily routine. Now, welcome out. If you're a veteran of this show and of our community, hashtag Team Tackle right in the chat. Let's get the conversation started. Have some fun here today. If you're brand new to the channel, you're one of the newer subscribers or not yet subscribed, go ahead and click on that subscribe button, click the bell, come back and join us each day. We go live whenever the markets are live, 12:30 p.m. Eastern Standard Time. Cody Mackey, come on in here first if you can. We got a full panel today. We've got Matt, we've got Mark, we've got myself, got Tanya on the back end producing the show. And Cody, you were teaching the Trading Lounge this morning. We were just having a conversation about it. We thought it was really interesting. Sounds like you got a really good lounge, right?
Oh, I loved it. We had a lot of traders in there that were asking fantastic questions. The lounge is my favorite show. It's unmatched because when you're there, students, are asking questions one-on-one. You're there to help them, correct some trades or even answer some questions, different things. We talked about, differences between naked puts and cash secured puts and, readjusting trades. And if trades gone wrong, what should you do? And it's just such a fun time. And if you haven't been in the lounge, I don't know why you haven't, because the lounge is definitely one of my favorites. Everything that we covered this morning, I think the students loved. I'll let them speak for it. Even yesterday when I was on the lounge, different students were sharing their, different studies or things, just giving those links to her. It just shows how great this community is. When someone was like, okay, well, hey, I have this ATR top left indicator. It's like, okay, well, I actually have this one that also has this added on, and I have this one that does 10% or 20%. And just the community comes together and we're sharing links, we're running through, we're correcting trades, we're analyzing the market. The lounge is by far my favorite show, hands down. Can't speak enough about it. And if you don't join the lounge, again, I ask you why, because it's every morning. And so what would that be? I'm at here Hawaii time, so it's 5 a.m. Hawaii time.
11 a.m. East. 11 a.m. East. We go
11 a.m. Eastern Standard Time, and yeah, to get to that, it's a pro member exclusive. So go through the website, get that link, jump on with Zoom, ask any questions you want, whether it's broad questions, simple questions, whether it's something exact like where let's say you have a bull call spread or something you need adjusted or maybe some help with or some advice. We can go individual for your account, or we can answer broad questions. Definitely come join the lounge, guys. Don't miss it. Don't miss anymore. You should be doing the lounge every morning, because not only are you learning, but you can also get that help for your own account. So love lounge.
I love the lounge as well. I think it's a really good morning for any trader who can go in there, get questions answered, have discussions, listen into other coaches, listen to other students' questions. Then after the lounge is over, you come join the halftime report. It makes it for a really wonderful morning if you are a student of the markets and you're learning this stuff. Marky, you handle all the customer service for Tackle Trading, and you probably get quite a few comments about the trading lounge. So I'm glad to hear that, Cody.
There is no. We got a lot of good products at Tackle Trading. We got a wonderful community. There is no one product that I get more compliments on than the lounge, and it makes sense, right? You when you have a question and it's burning in your head, and then you have someone help you answer it. Of course, that is going to create a nice little feeling, and so it's not surprised that we get a lot of compliments on the lounge.
Mm-hmm. Yep, I agree. And, as we're getting into the markets here each and every day, one thing I will tell everybody out there, we have all kinds of different programming at Tackle Trading. You can find any of our events under the events page in the events calendar. One of the best places you can go if you're ever curious, where do I find this access point to these shows these guys are talking about? I'll drop that link in the chat. Let's get down to market analysis here, guys. We've had a really good stretch in the S&P after it banged that 50-period moving average. We've been on the upward swing for quite some time with a couple of weeks of gains, hitting another all-time high here today, even though on a very light day. Leadership is in the NASDAQ today. We're going to take a look at the NASDAQ, all the different indexes here as we go through the markets. Matt, what's your techno read on the S&P here?
I'm just having a moment, Tim. You were talking about it's been a fairly easy stretch in the S&P 500, and historically looking back, yeah, it has. But I remember the conversations we were having here.
Mm-hmm.
And I remember the conversations the market was having here. And I remember the conversations all through this. And looking back historically, yeah, you see this type of price movement, you see it as a, yeah, that's a leg, guys, that's a leg up, no doubt about it, right? But remember what we were talking here in terms of multiple time frame analysis, and here in terms of multiple time frame analysis. One of the reasons why you get this type of easy market in terms of technicals in the broad market is when those multiple time frames do align. And that's when you get these nice little trading environments where you see high bases get just gobbled up. And when you see a market that is now starting to show momentum, and the technical patterns that form are high bases, that's a market that doesn't want to sell, guys.
Yeah, and I'm answering a little question in the chat here, Mark. So I'm going to bring you in here next if you can. Matt's talking about a no-sell market right here that's been having an easy stretch. And the first part of what you were saying there, Matt, I do remember those conversations as well. They weren't exactly easy to navigate at the time as we were having them, because yields were rising, and it was like, okay, what are we dealing with? Mark, how are you reading market conditions right now?
I mean, it's been a nice couple weeks, to be honest. It's been a pretty stress-free couple weeks. And this market right now reminds me a little bit of last summer, and it has a few times in the last month. I've made this comment a few times, where you'd have these certain areas of the market go up for a certain stretch and other areas go up for another, and the totality of it all lifted it up. And right now, I mean, this has been what did Matt say on Monday? It's a big cap Monday. It's been a big cap week. That flight to quality, if you will. Tech, those big name tech companies have been having a really good week. But big caps as a whole have been having a good week. And, it's kind of nice to see, like that first part of this year in 2021, it was dominated by the underbelly. It was dominated by stocks under $10. I mean, at the end of February, the biggest leaders in the market were, you could do a perfect curve. Under 250, under $5, under 750, under 10. Those were the top areas. That market, that's January and February. Lately it has been big cap. It has been a return to quality, and the chart setups have been really nice. I mean, the chart setups have been really nice in those areas.
Yeah, and one of the things that grabbed my attention in that regard here today is not just the NASDAQ, because the NASDAQ is not only Apple, Microsoft, Google, and Amazon, but when I went to the heat map and actually looked at the performance of some of those components, that is where the short-term strength has been. And, Matt, you went through this chart day by day by day by day as it was fighting. This is a very, very different story we've had over the last 6 weeks than the S&P. Even though the S&P came down tested, NASDAQ dipped below the 50 there, under quite a bit of pressure there during March. It then battled back. It took some time to find that resistance. Eventually we did break out, and we've had a nice little run here, moving it closer to its resistance zone at 13,900 and potentially an all-time high here soon. Matt, what is your read on technology right now and the performance of some of the leadership here in tech?
My read on technology is a very similar read that I have on the S&P 500. Whereas you do have a little bit more momentum in the short term, but from a pattern perspective and from a price performance perspective, I don't have a discernible difference on the NASDAQ versus the S&P, and quite frankly, not that big of a difference versus the Dow Jones right now. I really think those three indexes specifically in short-term analysis are performing fairly similar. When you're looking at the NASDAQ here over the course of the last couple of weeks, you see the breakout, you see the run, you see the consolidation, a little bit of hesitation, then you see another breakout fighting against the all-time high breakout channel. When you're looking at the S&P over that same time period, you see a breakout over extended high base fighting against the breakout channel. When you're looking at the Dow Jones over the same time period, not as much momentum here, obviously, but you see a breakout high base type scenario. So there's not a discernible difference outside of just pure momentum, but the trends, the patterns are all fairly similar. Obviously, as we've been talking about with the Russell 2000, you have had a change in trend. You've had a change in pattern. And so the psychology towards the small cap areas of the market are substantially different right now than they were coming into the year in December, in January, even into February. You still had momentum, but you started seeing volatility shifts. the same to the same degree and the same time frame you started seeing it in oil as well, and you're seeing a very similar type neutral type trend there. And what was the commonality? Good trends, good momentum. What happens? It stabilizes. These longer term moving averages catch up over time. And so you do have a difference in trend, in pattern, in momentum, in price performance, in mentality, in psychology, in any degree of analysis. You do have a difference in the Russell 2000 right now in comparison to what it was doing in the marketplace from, post-election all the way into February. And so, yeah, I don't think you have a difference in the big areas of the market, the blue chip indexes. You do have a discernible difference in the Russell 2000, though.
Mm-hmm. Yeah, and that discernible difference, obviously, in the price performance, but you can see it in the character of the chart and the nature of that chart as well. Back on that rut for one quick second, Matt, I got a question for you from a technical perspective, simple one. That's a head and shoulders, right? I mean, that is by definition.
By definition, it is a head and shoulders. But like I've been talking about in these reversal patterns, it hasn't. Let me put it like this. If this was October of 2008, I would call for a bearish downtrend prematurely on the Russell 2000.
Mm-hmm.
I know that because I did it in October of 2018, literally on the halftime report, called the shot. I wouldn't do that today, because this pattern that I have seen form, these traditional, bearish reversal patterns, the pattern that I've seen that actually is the better trading signal is not the short under 2100, but it's the buy above the right shoulder at 2300.
Mm-hmm.
And so traditionally, yes, I would, before the pandemic, be very aggressive in calling for this reversal pattern, because historically I have been very aggressive in calling for reversal patterns. But I just think there has been a change post-pandemic. And that change, quite frankly, is anytime the markets go down, what's the Fed, what's everybody going to do? Not throw a truck of money at it, like throw every piece of money at it, every dollar we have, every aspect of any monetary policy, fiscal policy we can throw at it, we do. And so there's just this mentality that the markets can't come down that aggressively. And so that buy the dip mentality, the stabilization arguments, these things, they have a tendency to stabilize. They don't have a tendency to bring them down aggressively from an index. And so technically speaking, yes, Tim, you would be very concerned about this 2100 level. But what I'm looking at here is a little bit of slowing momentum, perhaps an increase in support, and then looking at that very clean 2300 level. And so, yeah, the Russell 2000 is neutral right now. But I would not be looking at the Russell 2000 saying, oh my goodness, it's going to completely just fall out of favor the same way it did before the pandemic. I still think you're looking at this as neutral. And quite frankly, I still believe you're looking at the right shoulder saying it's a buy above 2300 far more than it's a sell under 2100.
Well, because it would be really hard for me to see the rut come all the way down back down to the 200 period moving average while the S&P is hitting all-time highs. So that would be a complete divergence, not just an underperformance in a rut, but it would be a complete change of character in the marketplaces. I love the analysis on the technicals, because that little 2300 level is still in play, and we got to let this thing work itself through. Mark, what's your read on small caps here?
I mean, the reflation trade, once again, in this let's take turns market, reflation trade has been very blah the last few weeks. There's been, pockets here and there, but as far as the broad, everything associated with that, and we've been commenting on small caps, and I've heard you guys say this several times. Listen, when you have a really, really good run, like a massive historic run, don't be surprised if it takes a prolonged breather. Look at tech, massive historic run off the March lows through August. Massive, massive, massive run. What did it do? It took a breather. I mean, that's just common. That's just normal. So, after some of those big, big runs, don't be surprised if it takes a breather. I mean, whether it's an individual stock. Look at Lowe's. Lowe's, had a really great run off the March lows. What did it do? Took 8 months off. Took 8 months off before continuing its uptrend. I think that's just what we're having with the rut right now.
Well, in this Lowe's chart, I like as well, because part of what's going on in the large cap techs, which we are going to look at some of the FANG stocks here in just a minute. Well, I saw a question from somebody online today, not in our community, like, is the run in tech already over? And I'm just thinking, what are you talking about? Like,
What? Over?
Yeah, because it's already up like a week or so. I'm like, what in the world are you talking about?
No, it's definitely not over. And quite frankly, it's never over.
No. I mean,
Like,
look at the last
literally
15, 20, 30
ever.
years of tech. No.
Ever.
No,
Ever.
I mean,
It's
one
never over.
15 years from now, as I'm hitting that 65 years old, Apple and Microsoft are going to be much higher.
Yes.
I mean, Facebook is going to be much higher. Tesla, I don't know. But that, though, they're great companies. It's just a question of valuation. It's a question of timing. It's a question of sentiment, and so like the run, listen, I mean, something would have to like fundamentally change in the United States for those big cap quality companies, not the unprofitable tech that's had a really good year. Unprofitable tech has had a really good year. That is the aberration. The quality companies is just, it's finding your spots, it's finding your entry points. Do you want to do short-term trades? But the run is permanent in those companies.
I'm glad you mentioned Tesla as the last company before you mentioned the word great.
No, listen. I was
you
doing
can say whatever you want.
cheek.
That's all I heard. That's all I heard. Speaking of good old-fashioned Tesla, though, are you guys seeing perhaps something maybe above 713?
I've seen
Maybe
stability in the whole EV sector. Industry, whatever term you want to use. Whether it be parts, EV part suppliers, EV companies, I've seen some stability. After a really rough stretch in February, seen a lot of stability. And when, from a technical analysis, from an old trader standpoint, when you see stability, you start to think, all right, what's the next leg up? Not necessarily what's the next leg down. And, took some really big shots. The whole EV did, Tesla included. There's been some stability forming now.
Well, you gotta like the stability, but in the stability, Mark, you also, a couple key points to kind of look at technically is you look at these horizontal resistance levels here, but you look at these increasing support levels as you threaten that breakout. And as long as these support levels continually to increase, you then get consolidation here, and then you break out on top of the horizontal at 712. You got the downward moving 50 at 719. Obviously, that's going to come down a little bit as you fight here for Tesla. As long as this 20 holds, I think you're lining up a good breakout here.
I agree. There's a trade there, in my opinion.
And for me, as long as the 20 holds, though, like, I like the run from where it's at.
Yeah. So I'm thinking breakout 710, 711, 712, wherever that trigger actually is. And the 20's got to hold, and then higher price appreciation. I'm also looking at the ARK components here. It's not just Tesla. I mean, ARKK is reverting a little bit here. Similar pattern. Tesla's actually,
I like Tesla better, though.
I agree with that as well. Square, second holding in ARK. I mean, I'm seeing some interesting performance in some of these companies. W pattern coming off of the consolidation here. Teladoc is
but what's the difference on Square versus Tesla?
Tesla has a better R to R after the confirmation, in my opinion.
Well, that's because of where Square's running at 200 all the way to 250 versus Tesla's running, and this is why I like Tesla and not Square. Square's probably running more aggressively right now, but Tesla, if it does break out, it's running from 660 to 665 into that breakout of 710, 720 versus what is Square's already ran a good 50 points into it. I just like the run. You're starting a cleaner run here from on Tesla.
I agree. And I think once you get confirmation, you can map out a better reward to risk. I shouldn't shorten that, make sure everybody knows what I'm talking about. Reward to risk ratio based on a trading setup. But that's even just trading, and Tesla gets lumped into those great companies that Mark's talking about, and Yeah, Mark, I did hear what you said as well. You did call Tesla a great company. We have tape on that. But I'm thinking also about Apple, Microsoft, Amazon, all of those types. And, Matt, I wouldn't mind taking a look at some of these charts. I mean, we've been highlighting that breakout on Microsoft for a couple weeks. It's performing like crazy over the last 2 weeks. Leadership, Apple's coming off the bottom. Can we take a look at some of these FANG stocks and maybe just give a quick technical read?
Well, I mean, you look at Microsoft here and you see the weakness, and Microsoft got caught up in that whole storyline. Nobody was talking about it. We had it on our report on the breakout. It's just something that we've seen over and over and over again. These minor moments in just losing favor with the marketplace, and then all of a sudden it breaks out of the right shoulder and just runs. We've seen it over and over and over again. And Microsoft now is looking at, breaking out of all-time highs. You're looking at a very euphoric condition right here where it's up, 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 doesn't even consolidate. And this is a sign of strength, guys. It's frustrating to traders, but it is a sign of strength. Whereas the traders like, well, give me another 2 days of consolidation. Let that 90 EMA catch up. Give me that clean high base. And Microsoft's like, I'm not going to wait for you guys. I'm not going to wait. That's a sign of strength. And so when you're looking at this on the daily chart, obviously Microsoft's overextended. When you look at it on the weekly chart, that is not the viewpoint you have on Microsoft. You're seeing a breakout of an all-time high. You're seeing a breakout of a 52-week high, and you have momentum behind it against the backdrop of 6 weeks of consolidation where nobody, and I mean nobody, was talking about Microsoft up until last week. And so you got a real good clean breakout on that weekly chart. And based on this weekly performance you're seeing on Microsoft, what's the most likely scenario here over the next up until this earnings? Got
I think
5 weeks.
Based on that, I would say kind of upward drift and upward mobility.
Upward drift, right?
I don't
Upward
think it's
drift.
going to explode in
Okay.
front of earnings, but I think it's got upward mobility. Yeah.
And if it did explode in front of earnings based on the technicals, you would not be surprised.
It wouldn't shock me at all.
It would not surprise you.
Mhm.
Looking at Apple, Apple's been one of the laggards, in recent history, still showing a negative price year to date. But you're looking at this on a weekly chart, sticks the landing there at 120, multiple tests under 120, can't break it. That coincides with old resistance over here. And now you wake up. This is called confirmation, guys. That's what that's called. Whether or not you agree with that as a buy the dip candidate or not, that is confirmation. You're looking at confirming above the previous week's high. You're not confirming above the previous week's high. You're confirming above the previous 5-week high.
Mm-hmm.
That's the consolidation you've had in Apple. So when you're looking at Apple here, you see a short-term bearish downtrend coming into old support levels, old resistance, new support at 120. The 200-day moving average slowly and methodically creeps its little line up to catch up with the price. You break out, you're now on top of all of these moving averages, which typically, when you're on top of all these moving averages, what are they going to act as?
Support. Catalyst.
They're going to act as support. They're going to act as support. So you get the double bottom. You get the double top. It's not very clean, but that's what you get. And then you get the breakout. Now you might say on the weekly chart that, or coming into a Thursday afternoon in the East, might be a little overextended. But who's looking at Apple for next week?
I am. I like the reversal
Institutions?
characteristics. I think that there is an institutional move into these companies.
I do too.
Yeah.
I do too.
Yeah.
I do too. And I think that's the key point, is the institutional flow here. And so I do think you're getting some legitimate price movement coming into these stocks. Like we were talking about Microsoft. Do we see these gains this week on the breakout? Do we see the market just puking this up next week?
No, I don't think so.
Something would have to happen. Like
Okay,
something.
so something would have to happen. All right, let's think about what that something could be. Could it be economically?
The only thing I can think of is if for some year the 10-year like jumped to 1.9 or 1.85 and had this massive jump.
But even a massive jump right now, in the last 2 weeks of that 10-year bond market,
Mm-hmm.
It's been 1.7. It's been 1.72.
172,
it's been
173.
1.75. And what's the market done?
Kept on chugging.
Kept on buying.
Yep. Playing the little game.
I don't believe that bond market storyline was as big as other people do. I didn't think it was as big when it was happening. And I certainly don't believe it's all of a sudden going to spark the market's fear next week, being like, oh yeah, now we're concerned again about the 10-year note next week. Maybe if you get a radical spike, maybe, but that's a hypothetical. But economic reports next week? There's no economic reports next week that like we got to be that concerned about.
Not that's going to drive the markets.
You got core CPI report,
right?
But what's the CPI report going to do?
It's
besides confirm everything that we've seen with the Fed?
Correct.
What's the so we're not going to get any new information from CPI. We do get core retail sales next week, because I'm willing to bet that's a positive economic report. I'm willing to bet most of these reports, Fed manufacturing index next week, positive economic report. We haven't had very many negative economic reports. The economic backdrop right now is about as euphoric as I've ever seen. Name me a time where we've had more euphoric economic reports than in the last 2 months.
Well,
from where we were.
Obviously. No, of course, obviously, and GDP revisions are all upward. Manufacturing reports have all been as strong as they've been in 40 years. I mean, we've been going through these in the huddle, on a regular basis, and here on the halftime show on a regular basis. The economic data has been coming in a very, very good and strong, in above expectations and showing growth. So
then COVID data next week. We've had very negative COVID data.
We've had some storylines that 8 months ago would have had a different reaction.
Tanked this market.
Yeah.
And yet, does this market care about it right now?
Nope. Market's focused on the vaccine rollout.
Is the Fed going to say anything next week? Okay. My point is this: anything that could stop this momentum is only hypothetical scenarios that we don't know about yet, which exist in every market in every second of every day. And you can't trade based on that. You got to trade based on what you see. And what you see right now is institutional momentum coming into the big cap tech stocks. That's what you have. Institutions don't buy today to sell tomorrow. Hedge funds do, traders do, institutions don't. And that's what I think you are seeing a little bit here this week, is finally those big time institutions are coming into Apple. They're coming into Microsoft. They're coming into, when you're talking about the safety of the market, they're coming into Amazon. They're coming into Google. They're coming into Facebook. They're coming into these big time areas of the market where everybody wants access to, that nobody worries about these stocks 10 years from now. And like Mark said, I don't know what's going to happen to Facebook, Apple, Microsoft, Amazon, Google in the short term, but I don't know anybody, and I mean anybody, that thinks their prices are lower than they are today 5-10 years from now.
That's right.
Like anybody.
Yeah.
So these types of movements in these types of stocks, they just don't get flipped on a dime like an Allen Iverson crossover. That's not how institutions play markets in general. And so, I do see the price performance in a Facebook as significant versus when we see price performance like this in other areas of the market. If you see this in small cap stocks, it does not have that big of an impact on the market. When you see this happen on companies like Apple, a $2 trillion company, Amazon, a $2 trillion company, Google, $1.5 trillion company. When you see this happen with those FANG stocks, and again, we've made fun of Jim Cramer a lot in the halftime report, and quite frankly, he has deserved a lot of that. But what he also deserves is a tremendous amount of credit for labeling FANG in 2013 and the importance that FANG represented to the marketplace for 6 consecutive years, leading this market, maintaining this market, being the lifeblood of this market. Those 6 stocks out there The importance of those stocks to this market over the last 10 years cannot be understated. They are that important to the market. And when they run, when they pick momentum, that momentum usually doesn't just stop after one leg. And yes, anything can happen in the future. We live in a very volatile, uncertain world. But when I see price movement in FANG as we're starting to see, and when I'm seeing Microsoft confirm against an all-time high, and I'm seeing Apple after 5 weeks of consolidation where nobody's even talking about it, wake up and show them who's the big dog on the block, and Amazon, which has not been, nobody has been talking about Amazon in literally 8 months, and then all of a sudden it has in a week the biggest momentum it's had in that last 8 months. Facebook, we talked about literally right here, that snapback bullish retracement fighting against the $300 breakout. You started seeing that honestly here, but confirmation here, third confirmation there. How much more evidence do you need? Now, the question isn't about, for me anyways, the question isn't about whether or not this is waking up the market. I certainly believe it's waking up the market. It's now a matter of technically looking at a Facebook saying, okay, yeah, Facebook's alive, it's well, it's doing fantastic, but you're also range up right now. You're also range up. And so when you're looking at Facebook, for example, you're looking at this short-term trend here, you got a stock going from 255 up to 295, 40 points. You got a stock that goes from 278 up to 315. You're at the top end of its range. And so one of the problems some newer traders are going to have is they're going to wake up to the headlines of what's been happening in big tech this week, and they're going to be like, "Oh man, let's all go jump and chase and jump and chase." Well, guys, the pros bought here, the pros bought here, the pros are selling here. Because the only way to make money on this is to lock in profit, let these moving averages catch up, have Facebook form a high base. And so the only problem I see, and it's a minor problem, it's actually a good thing for us traders that tackle trading, is let's not chase the storyline here. Let's be patient, let these moving averages catch up to Facebook, and then let's see where that tight clean trigger is in a week from now on Facebook. Mm-hmm. On Apple's a little bit of a different beast. I don't have an overextended, type technical fill. We just broke out of the moving averages here. Yes, you are overextended a little bit here, given the fact that you've ran from 218 and now 118, you're clinging into 130. Yeah, you're a little bit overextended here, but all you're going to need on Apple is a little bit of a hesitation. That's all you would need, because you got more of a Apple could catch up philosophy, whereas Facebook, Google are leading and you got to be patient, wait for high bases. Apple's in a little bit of a catch-up mode. Give us just a 1-2 day hesitation, then I do think you can play a little catch-up, playing the momentum on Apple. Again, Google, when you're looking at Google, very similar to what you read on Microsoft, you read on Facebook, a little bit overextended, maybe be a little bit patient. That's why I do think you're a little choppy on the breakout. You don't have you're definitely overextended here. Be a little patient, very similar to Facebook. Let those moving averages catch up. Look at that on the weekly chart. You got a really good clean breakout on the weekly chart, little overextended coming into perhaps earnings. Be patient. Let that data kind of smooth out. Let those moving averages catch up to it. When you're looking at, so we've done Facebook, Microsoft. Let's take a look at Netflix. Netflix was one of those original FANG stocks, right? Netflix was there. And Netflix, very similar to Amazon, has fallen out of favor for quite some time. I do think you are a little bit overextended coming into the breakout channels here. You got a couple breakout channels on Netflix you got to concern yourself with. The first one is in this zone between 560 and 566. You are definitely overextended as you come into this very important zone. The difference between Netflix and Apple still has a lot of room to run before it gets into the top end of the zone. Netflix is at the top end of the zone. Given that, you want to really be patient to see Netflix set up here. Maybe similar to a scenario we saw at Best Buy. Whereas you were at the top end of the zone, you waited for a little bit of a snapback. Now you're coming straight up back into that breakout channel. And so on Netflix, you're kind of here. Wait for a little bit of this before we look at that breakout on Netflix. But the beautiful thing is FANG is waking up, and FANG has not been awake this year.
Been hibernating.
It's been hibernating a little bit. But they're woken up and they're ready to rock and roll, in my opinion.
It's springtime. They're waking up. It's time for a rebirth, and we're seeing it in the FANGM stocks here just in the last week. I love the technical analysis, but just performance-wise, Amazon up 7%, Google up 9%, Facebook up 8%, Microsoft up 7%, and that Apple chart, which I really like, is up 6.7% as well. I do, want to get a super chat read here as well. We got one from Eli Levy. It's kind of within the same context of what we're talking about as well. Just in Chinese tech, though, Matt, he wants a quick technical read on Baidu if we can, and we got to respect super chat here, Eli. We appreciate
always
the $2.
Respect super chat.
And there's been a lot of chatter around Chinese tech stocks over the last several months. Obviously, they've been underperformers. They've been drugged down. Some of them got caught up in some of that recent headlines when they were selling the Archegos capital management stocks. But that wasn't only like, I think, what were the companies
That was Baidu.
there? Baidu specifically.
That was Baidu specifically.
Yeah. Quick technical read here on Baidu, Matt. What you seeing?
It's tough. It's tough in Chinese tech right now. Baidu, Viacom, these stocks that got caught up in the hoopla of that storyline. I do think with some of these stocks, a little bit of overreaction. Baidu, a little bit of overreaction. Viacom, a little bit of an overreaction. So I do think there was an overreaction to that storyline, but I also think we're in the middle of that storyline still, and we probably should be patient there and let that kind of work itself out, especially when you're seeing what you are seeing this week on American big tech. When you're seeing what's happening with the blue chips in America this week, money is flowing there for a reason. I am slightly concerned about geopolitical situations with China specifically. I'm also concerned about global economics in comparison to American economics. And I think the bet here, guys, if you want to use that language, I'm not a huge fan of the language of bet in the stock market. But if you wanted to bet on an area of the market over the next year, and you're basing that on economics, you're really talking America and China. That's what you're talking about. So I totally understand the conversation, but I'm going to bet on America over the next year. I think they're in a leadership position. Money's flowing into big tech coming into America. I think we're pacing from a vaccine distribution, and so we're kind of in we're not Israel by no means, but nobody is. But we're in that leadership position. I have a hard time seeing Chinese tech outpacing American companies in the next year.
Right. I have a hard time with that as well. And Markey, obviously getting drug into the recent volatility in these Chinese tech companies has got short-term implications, not just the longer-term implications here. Matt, that Baidu chart and the FXI charts, they're ugly. I mean, FXI might have something above 48 or 50.
Yeah, will you pull up the Baidu chart? Because it is an interesting chart.
The Baidu chart has an interesting breakout potential. You're looking at an interesting breakout potential right there at about 230, and that is definitely, I could see a lot of traders getting excited about that potential breakout.
Do you have a K trade potential here?
I don't think you have a K trade because I don't think you have a short. And the reason I don't think you have a short here is FXI is really kissing against the 200-day moving average here. And so you're going to have a battle zone on FXI here. And as FXI really fights for that 46 handle, that's going to help Baidu. It just is. And so I don't think you have a K trade scenario where you're looking at the bearish retracement short. Now, again, Mark, if this was a year ago, I would have a different take, but shorts for me, it's got to be beautiful. It's got to be picturesque. It's got to be like, it's got to have top-down analysis to it. Sector's got to be out of favor, industry's got to be gross, and the stock's got to be underperforming. For me to be like, yeah, that's a great short, it can't just be technically on that stock. And so I definitely see what you're seeing on Baidu. I just don't think the evidence supports it on FXI. And so I got a little bit of a misread there for me personally. And so I would say no to the K trade. But to the top side of the K trade, I do see something fairly interesting here where you have an old support level right there at 230. In this volatility here, where it was just getting absolutely rocked, where did it stick the landing? Right there at that 230. And then where does it kiss up against? Right there, the 228 to 230 range. So I do think you have an interesting candidate to where you could look at Baidu saying, you know what, I'm going to play this aggressively on this breakout at 230 and play it aggressively between 240 and 260, depending on momentum and moving averages and whatnot. But it would have to be aggressive. It would have to be an order above 230, taking on the snapback, fake out if it does do that. But I definitely see something there. It's just a matter if you want to be aggressive and quite frankly, do you want to be aggressive in Baidu above 230 in the face of this, or do you just want to be patient on not Ford, although Ford, I like Ford, but here on Facebook and saying, I love this strength into Facebook. I love this consistency into Facebook. I just need a little bit of a pattern to develop. And I do think the better trade is patience on a high base in Facebook, or patience in a high base in Microsoft, or patience in a high base in Google, or chasing the momentum in Apple. I do think that is a better trade next week than perhaps taking an aggressive trigger of 230 on Baidu going into this weekend.
Mark, anything you want to add to that?
No, that all sounds good. Listen, I don't know. Big tech is very, very interesting. Like last night on Trade Masters, my favorite pick was Greg's pick on Apple on the breakout of that. And one of the things I like about this market right now, and it's this shift. Volatility on some of these big companies is really, really, really cheap compared to where we've been in the last year, making those option trades very interesting. When you can look at options for the first time in a long time and be like, that feels cheap, especially compared to where we've been. And so like, it really opens up so many different strategies we can do on these bigger companies where we can fix our risk, where we don't have to, buy shares and do something because we just can't afford the options because the volatility is too crazy. Bull call spreads are really cheap on Apple. Just straight call options are really cheap on Apple compared to where they've been. And so, it's one of those adjustments to the marketplace where, look at that volatility chain.
Wait a second. Are you starting to get excited about 33% implied volatility?
Well, listen, when it's 100, I'm selling. And when it's down in the 20s or 30, go look at, I was amazed because I hadn't looked at it for a while. XLF is down in the 20%. So buying options on that potential breakout, this was a pick that Marquise had on a breakout. You go out in time, and you go out in time for a while to June, or September, and you're looking at option, and go look at the price of those at the money options. They're pretty cheap. And so if you get
5%. Can I just add to that, yeah. Cheap, Mark? When you're looking at about 5% of an at the money option value in comparison to the stock price, you can look at this implied volatility of 23 and just assume you're going to get a pretty decent price on the option. But if you're paying 5% on an at the money option, you're getting a pretty good price.
And so, that limits your risk, but doesn't limit your upside.
Especially 162 days. That's a ton of time.
There are some really attractive option pricing out there. And so if we get our signals, if we get our setups, if we get that, and that's one thing we do every week in our scouting reports at Tackle Trading for our pro members, the cheapness of options and the low volatility really opens up the playbook. And that gets me excited as a directional trader, as a primary cash flow trader, when I can get cheap risk and still get the upside.
Oh, see, here's the beautiful things about lower volatility. The amount of option spreads we can start doing is really quite impressive.
Mm-hmm.
And when you're looking at, say, Apple, when you're looking at some of these plays, man, honestly, you're probably going to have a little bit of buying calls, getting into bull call spreads in those option reports coming in the next few weeks. You know the scale-in approach we like to bull call spreads.
Mm-hmm.
You buy a slight out the money call option, anticipating price appreciation, with the anticipation to sell the call against the option you own once it dings resistance. And it's one of my favorite option strategies to apply. And you're definitely setting up in a technical and a volatility condition for it.
Mm-hmm. Mm-hmm. Yeah, I'm with you. I love that concept, by the way, where you take the long call, wrap it into a bull call.
Quite frankly, it's how you play Google.
Yeah.
It's how you play Amazon. It's how you play those big dogs from a directional perspective.
Mm-hmm. I got to go back on Baidu for 1 second because the chat is Eli's giving me a little bit more context. I just want to give one little bit of context to it. He's short strangle on Baidu, 210, 270, short call, short put. Eli, the only thing I'll say about that is a very, very advanced trade. When you are a naked option on two legs of the side of the spread, you better be in the top few percentage of option traders.
Wait a second. What is that?
Short strangle, 210,
short
270.
Strangle, 210, what?
210, 270. 210 is only $15 on a product that has gone
Eli.
gangbusters.
Eli, 210 by 270. It depends when he did it, but you're ratioed here.
Don't ever FOMO trade short strangles. It's the only bit of advice I'd ever tell anybody like that.
I get it, Eli. I get it. You're looking at a short strangle on Baidu, and I know the ROI 43 days out is going to be enticing.
Mm-hmm.
I'm also going to say this. I do not like short strangles. Like I've seen way too many bad things happen on short strangles due to, quite frankly, mismanagement.
I don't like them in these markets.
I do not like them in these markets.
I've loved them over the 15-year career I've had, right? Different times, different markets. But
definitely not on Baidu.
It's a big boy trade.
And that's the thing. One of my first questions was, is this a K trade, which would make a short strangle like one of the worst strategies you could use on potential explosive movement. So
the K trade, the analysis is there. I just don't like the short because of the volatility that would happen on the downside.
Mm-hmm.
And that goes against K trade. I mean, that goes against short strangles 100%.
I agree. And then one other quick, request.
I can't leave this. I just don't have it in me. I do not have it in me to leave this from an educational perspective because I care way too much about our
That's why I brought it back up. If you want to run with it, I would love to.
A short strangle is one of the most aggressive strategies you can apply here. And if you don't understand number one, volatility, you can get rocked on a short strangle. Mm-hmm. And I've been doing this for 15 years now. And I've just seen way too many people talk about short strangles as in this end all be all where you can get massive probability, but then they don't understand margin requirements and they don't understand volatility and they don't understand volatility skews, and they don't understand what happens when they mismanage it, and it just can become an absolute nightmare. And the only way that I could be like, yeah, that's a good trade, is if you're literally maximizing your ranges and you are outside of any historical range. And at anything above that 200-day moving average, to me on a short strangle, is just simply far, far, far too aggressive for this type of volatility. And and again, I get it. When you get volatility, those ROIs get sexy real fast. They do, but they get sexy for a reason, and that's because you have more risk. So I would just be extremely cautious about margin type naked strategies on the call and the put side if you do not have, and I'm dead serious, a professional type skill set in trading. And I'm going to tell you, if you do have that professional skill set, you're probably not looking at a strangle on Baidu.
Yeah, that's right. Listen, I'm a pro.
Eli, I'm sorry for putting it like that, but this is a mistake. I don't care if you make money or lose money on it. That it's just a mistake to apply a short strangle that does not have this type of range on a company with this type of volatility. The stove is hot, and we grabbed it with two hands.
He says he's out with a small profit. So
good. Now I feel better.
There you go, Eli. There you go. Hopefully that helped you with the analysis, Eli, and whatnot. Appreciate the super
Eli,
chat.
Again, when I just see these things with margins on strategies that can shockingly impact your portfolio, I just get very conservative, very fast.
Me too. So, that caught my attention as a red flag there for sure. So I'm glad we spent some time talking about it. I'm loving this here today, guys. Obviously, we got to go through the rest of the market. Jonathan, we'll look at Vail later in the show. Last thing, I'll make sure I got it in my notes. So we'll take a look at that chart a little bit later. But I do want to flash through the rest of the commodity market. Gold, actually, we haven't got to yet, and it's threatening a breakout here today. Let's run through them if we can here, Matt. Crude oil, gold, the dollar, Bitcoin. Then we got a few stock news items I want to talk about a little bit later in the show. So let's start with crude.
I'm still a short strangle on Baidu.
I get it, bro. I get it. And it was one of those that grabbed my attention. I'm glad we spent some time on it. I think hopefully that was very helpful. He says I was dumb. Eli, I don't think it was dumb.
No. I don't think Eli was dumb. I think there are extremely dangerous and bad analysis out there in YouTube la land. And people need to be extremely cautious with the information they get.
Mm-hmm. Yeah, don't just rush into new strategies, guys. All right, let's move on. Let's look at the commodities real quick. Crude oil, if we can. Obviously, Mark, there's the chatter lately about increasing supply. It's kind of kept crude kind of stuck in the mud a little bit here. As long as it's in the range, though, I don't see much to get too worked up about crude. A little doji here today. Anybody got anything on crude?
No, I mean, listen, these ranges can last in commodities. They can last for a bit. It's a little bit of a wide short-term range, but eventually will break one way or another. I mean, there's been things weighing crude down. Reflation trade hasn't been hot. OPEC not doing everything they can. Still, they're pretty moderate in their response. Lockdowns in Europe. There's been a lot weighing on crude, and yet that support level is still holding. That keeps holding in the face of negative sentiment. I think that's eventually telling, but you got to wait till you see it. It's easy to wait in a short-term consolidation pattern for the chart to tell you what to do. And break of resistance, break of support, wait for one of those things.
I like that line. I know the line is from 57 to 50, but I
big
like
line.
that line.
It's a big zone.
It's what it is.
I'm not removing that zone. That is there to remind people of the stabilization argument.
Yeah. I'm with you. I like that line. Keep that line on that chart whenever we look at a little doji here today. Let's go through them in this order here, Matt. The dollar next, then Bitcoin, because I want to finish on gold. It's going to take a little bit more analysis because it's actually the most interesting chart. Dollar on a pullback, kind of a changing character maybe there, Matt. I'm seeing a little momentum shift. I don't really, know what to read in this chart outside of that. Anything you want to talk about?
Yeah, it's a failed bullish retracement. It's a change in chart. Yes.
Yep, I agree.
And that is positive for gold.
It's positive for gold, probably positive for the broad markets too. Let's take a look at Bitcoin as we are hesitating and stalling under the 60,000 level. One way or the other, until it does something up here at 60K, break and confirmation, something like that. I'm just seeing hesitation and momentum change.
It doesn't matter at this point. It can dance, it can party, it can take a nap. It really doesn't matter. The only thing you care about is 60 to 61K.
Mm-hmm.
I mean, are you seeing a series of higher lows here potentially?
Yeah, of course.
Yeah,
absolutely.
I mean, it's just pops out off on the chart, right?
Let's see if we can draw some lines. There you go.
You know, I mean, there's
There's your 45-degree angle trend line right there.
You know, you establish at 45, you come down on a pullback, you establish at 50, you had a little pullback. You know, and if that holds there at what it was, 57 and change or somewhere in that range, I mean, that's a classic technical pattern, you know, building there. That is a classic technical pattern building there. So it's going to be interesting. I mean, I've just been sitting on my hands, just patiently listening to my stupid rules, saying you cannot add it.
Though. Keep
Bitcoin,
listening. It's a good trade coming up.
Like, you know, just wait, you wait. And I've wanted to for 8 straight days add Bitcoin exposure, but I'm like, listen, you have rules. There's rules for a reason. Respect resistance. You can always pay a little bit more for that breakout, and it's well worth the confirmation.
The only question I have is because, Mark, yeah, I see the same thing. Once you broke this, you weren't looking at aggressive triggers, but you are still looking at that 60K. And the only question, because you got multiple ticks up here, obviously, you know, when you had the one tick up here, I remember literally right here talking about Bitcoin saying, oh, I don't care about that wick. It's just one data point, right? Well, data changes. You have lots more data above 60K at this point. So I do think you do have a conversation with how you want to trigger here. We all know what Bitcoin can do on a breakout, right? Like, we know what Bitcoin can do on a breakout. We know what Bitcoin can do on a breakout. We know what Bitcoin can do on a breakout. And when you look historically at Bitcoin breakouts, some of these happen over the weekend, and that's why you're seeing a little bit of the additional increases in price. But breakouts out of consolidation have been a winning strategy for Bitcoin. Aggressive triggers have also been a winning strategy for Bitcoin. Being patient and waiting for technical confirmation has usually left you behind, left you behind the price movement. So the question I have for you guys, Mark and Tim, and the community in general, is, do you see this potential trade on Bitcoin as an aggressive trade, or do you see it as a trade that you're willing to wait for confirmation?
I'm willing to wait. I'll go first. And by the way, for me personally, the way that I'm going to be playing this is with the Ethereum contract, but that's a different conversation because Ethereum's setting up in a consolidation. When we got to add ETH. I got to tell you, when Bitcoin breaks, I think Ethereum, who's got a little bit relative strength against Bitcoin, actually has a chance to pop above its resistance. It already caught the breakout. So I'm looking to add exposure in the other, coins. And Ethereum's not a small coin here, guys. We're talking about the second biggest cryptocurrency in the world. But Bitcoin above 60K would be clarity for that marketplace for me. And I think it's going to be lifted.
Okay. And do you feel like you're not going to trade it aggressively because you don't like the aggressive trigger, or is it because you already own Bitcoin?
I already have
a longer term instrument for you.
For me personally, I already have a bunch of exposure here. I'm comfortable. I'm sitting on gains, and let me get the clarity. Let me get confirmation.
You're sitting on gains upon gains. Yeah. Okay.
For years and years. Yes.
So you're not looking to add. You're just saying, oh yeah, I'm good with Bitcoin. I'm gonna cheerlead the breakout, but I'm actually going to be trading Ethereum here.
That's right.
Okay. Mark, what about yourself?
No,
again, specifically towards the breakout of Bitcoin here.
I'm waiting for confirmation. I am a big respecter of resistance. Waiting for resistance to break has saved me so many times. Now, every once in a while, right, you're like, oh, I wish I had got in earlier because I knew, right? That's nice. And every once in a while, that's how it works out. But man, there's been so many trades, and as a totality, just waiting for confirmation and a break of resistance, over 15 years, that's treated me well. I will be doing that the rest of my life. Respect resistance, pay a little more for confirmation.
Can I try to get you into the middle ground here? Okay.
Well, I already have exposure.
Well, so I know, but I'm just saying, I'm talking about a new trade. Okay. I know many people in tackle have exposure, but because of the data between 60 and 61K, what do you think about nothing there, but a traded aggressively above 61? Confirmation has to close between 60 and 61, but I do think you can be aggressive above 61K. Guys, there's scenarios you wake up and it's at 66.
Yes.
That's the trick, right? That's the trouble,
that
right?
and
It can
that's
fly. Yeah.
Well, and that's, guys, that's what happened here. This was Friday. This was Sunday. This was Friday. This was Sunday. We woke up on Monday here. That's what can happen on this type of quality breakout here. And so, yeah, we're coming here on a Thursday. On Monday, we could be waking up with Bitcoin here, and it's being
that's
just
what I was
pointing
worried
that
about
out.
last weekend. You know, and I like the technical setup better.
I like it better this week than I did last week.
Me too.
In terms of the overall technical setup.
Yes.
I do think you can be aggressive above 61K because of the wicks between 60 and 61. And again, coming down, let's look at the hourly chart. You see these wicks between 60 and 61 here. You see this wick at 60 to 61. You see all these wicks, 60 to 61, 60 to 61, 60 to 61, 60 to 61. There is a ton of data between 60 and 61. I don't think you can play that aggressively between 60 and 61, but that got nailed to the tick at 61, guys. That candle right there nailed to the tick at 61. I think you can be aggressive above 61. I just don't think you can order above 60.
Mm-hmm. Mm-hmm. That's I have no problem with that, Reed. And you're right, though. If you do catch the breakout, one of the things you got to be aware of with these things, they fly, so you easily could be at 65, 66, 68 before you have another opportunity if you're not on the ball. But it's also one of the reasons I approach crypto longer term, quite frankly. I use the short-term analysis to accumulate and do different things with management and whatnot, but mostly I'm a longer term.
I agree with that. But I also think it's more important to have thorough conversations on the technical condition of Bitcoin right now, given the fact that we're approaching a really, really potentially fantastic, beautiful trigger on a breakout, and that's not always the case on Bitcoin.
No.
A lot of times you get this. That's not a great technical breakout type condition, guys. Looking back, yeah, we're like, oh my goodness, look at that leg. That's amazing. You were running from 30K all the way into the breakout of 40K. That's not a good breakout. Here, you got a standardized cup and handle continuation pattern with a ton of data between 60 and 61. I do think you have a different read right now on this potential breakout than you do on any other random day that ends in a Y on Bitcoin.
Mm-hmm. And this kind of breakout, has specific characteristics to it. It's not exactly the same as the gold breakout that's developing. And I do want to take a peek at that one next if we can. Obviously, different type of character in terms of the volatility, the product, all that kind of stuff. Matt, we've been eyeing, we've been waiting. You've been nailing this, quite frankly. You nailed the 1680 zone, thought that it would test it and hold it. It did. It came back up, started selling back down. We got the double test. Now we've been rallying for the last 6 days or so towards resistance. Here today, we're now testing a breakout, but you still have some chop above it. What's your read here on the chart, Matt?
Read's very simple. This is a textbook W formation, and my analysis has simply been following textbook W formations, and it's been playing out. So we're just at that next part, the next part of the W reversal, and that is the breaking of the resistance. That's at 1750, and we talked about where it's going to test and the importance of the 50-day moving average. And so, quite frankly, we're just at that next stage in this potential reversal, and the characteristics are actually very, very positive in my opinion.
Mm-hmm. Mark, I know that you've been adding to your gold exposure based on the analysis here at the show. You've been talking about it. What's your approach to gold?
No, same. I've been the analysis here on the show. I've loved. And I've said this several times in the last week. I love how when it came down in volatility and stuck that support level, I've been adding a little bit every day. I added a little bit more on that breakout. I mean, once again, and then I do this from a cash flow perspective on right now, because we got weight ahead, right? Falling moving averages, other resistance zones, stuff that can happen, right? So I am not directional, but I have been adding cash flow exposure to gold pretty steadily over the last week, and probably will continue to do so unless I, see something. So.
Mm-hmm. Well, and the beautiful thing about gold, GDX, or anything we've been analyzing on gold, it's got a little it's got a little bit of the same analysis that Bitcoin has in it. Obviously, there is some correlation there, but unlike Bitcoin, where we have to have a very thorough conversation on where the breakout channel is, where confirmation is, how you want to play it aggressively versus conservatively, you could be extremely patient on these reversals in gold because it's gold. It doesn't have 130% implied volatility. It's gold. It doesn't move like that. If all of this price projections are good, it's going to go from 35 to 37 back to 36 up to 38 in the next 3 months. It doesn't move very fast.
Mm-hmm.
And to my son Tanyan, he might be like, "Oh, let's go buy Bitcoin." To me, at 43 years old, I'm like, I love this slow, methodical type environment where I don't have to worry about it on a daily basis, and I can watch this little turtle just creep its head up and do nothing and never get its head cut off. It's fantastic. It's fantastic.
It's so funny you say that, because like when I wake up in the morning, I don't worry about my gold positions. I don't I gotta go check my gold positions. Bitcoin, I'm like, all right, where's Bitcoin at? That's like the first thing.
Bitcoin.
Is Bitcoin
oil,
at 42,000 or is it 67? I gotta know, because either could happen any random Thursday.
There's nothing better than petting that shiny little rock in your portfolio. I can tell you that. But you gotta love it, because you can miss out on a day or two, and you don't have that fundamentally of a different read. You're looking at a day to day where you're talking about short-term confirmation of the W formation in both gold and GDX. GDX is obviously confirming against the horizontal breakout channel. You've already reclaimed all your moving averages. These are obviously going to now play a role. You're not only stepping up the ladder, you just broke out of resistance. This looks really, really, really healthy for GDX in the short term. When you look at GLD or slash GC, you're going to see a W formation. Pretty standard W formation where you come down into support, double tick into support, consolidation at the resistance channel. You're breaking out of the neckline literally today. You're confirming out of the neckline. But when you talk about short-term reversals, guys, it's not just the breakout that is ultimately confirmation. What is ultimately confirmation in a reversal is the first test of support. And that is the most important part of the reversal analysis, is that first retest of if we establish that higher low. One of the reasons why I was so on GDX instead of gold over the last couple weeks was because it's subtle, but it's important. This subtle increase in support. That subtle increase in support shows you that the buyers are willing to come in at a higher price threshold, whereas they have not been willing to in recent history. That shows you a little bit of positive mentality coming into GDX, coming into the miners, that is front running the analysis in gold. And if you'll remember, one of the reasons why I was so confident that gold was going to retest and was going to stick the landing was because of what was happening in GDX. That increase in support was showing me the psychological behavior of the traders in this space, and that gave me a little bit of an indicator that the buyers are willing to pay a little bit of a higher price. And when buyers are willing to pay a higher price, their confidence is building in this space. And so it wasn't surprising to see gold stick that landing, and it's not surprising to see it perform the exact way it should perform in a reversal. But once again, the ultimate confirmation is not the breakout. The ultimate confirmation is not the breakout. We've been there. We've seen this. We haven't seen the level of quality in data and detail that we're seeing. We haven't seen the quality of a double bottom, double top reversal type thing. We've had V-shape analysis in terms of these breakouts. V-shape, you had a little bit of a W, but a V-shape, and it didn't play out. Here you have more of a standardized W that is happening at a major area of support for gold. We all, in this environment, every one of us, including people on Wall Street, are like, gold should perform better in this environment. Gold should perform better in this environment. Gold should perform better in this environment. Well, we're now starting to see that wake up. And I just feel like we're at the beginning. And when I mean the beginning, I mean the very beginning of something here on gold. And because we feel we're at the very beginning of something, and because it is gold, I don't feel we all have to be aggressive here. Ultimately, confirmation is not in the breakout of a reversal. It is in the snapback bullish retracement that we have yet to see here. And that is what is ultimately going to give you that. It's time on gold. It's time to push the chips on gold. It's not the breakout. It's allowing gold to establish that higher high. The pros are trading it here. Tackle's getting involved here, no doubt about that. But allow it to see how it navigates a higher high. And then when we get that bullish retracement coming down into now upward moving averages, that's that picturesque, beautiful technical formation that we have been so patient on gold. And I'm excited because there's 5 points to reversal, Tim. 5 points. We're past 4. We just have the last one to confirm on gold.
Yep. And by the way, I love all this analysis. I do have a question on GDX as well in regards to everything you guys have been talking about. One of our long-term members, and by the way, a recently married member of Team Tackle, Mickey Donnelly. Congratulations on your marriage.
Mickey, congrats, brother.
I saw that on social media. Look very happy, my friend. Mickey asked, on GDX, he's long. Would you cover it at this point?
I wouldn't. I wouldn't. I'd give it a little bit of room, but if you did cover it, Mickey, I would be very conservative in how you want to cover it. We're at the beginning points of a hypothetical bullish uptrend. I do think we want to open up that risk graph and take on the risk a little bit. Gold is also a GDX specifically, gold a little bit, but GDX specifically is one of the better cash flow instruments out there in the market. There's not a lot of there's quite a bit of cash flow instruments, but there's not a lot that you can consistently get that 2 to 3% ROI every single month on the covered call, and GDX is certainly one of those. The covered call is truly the reason why so many in tackle trading invest in GDX. It's obviously got the gold and the silver kickers, and we like our miners. There's no doubt about that. Tackle likes their miners, no doubt about that. But there are times where I think you take the risk to the upside, and there are times when I do think you want to, release the Kraken and open up that risk graph. And when you're at the beginning of a potential reversal, I think it's at those moments in time where you do want to take a little bit of the risk to the downside, leave it a little bit more open-ended, ratio those covered calls a little bit in this environment. And what I mean by that is if you own 1,000 shares, you're looking at writing 5 covered calls. You're not looking at writing 10 against 1,000. You're not looking to write 2 against 200. You're looking to write 50% against your net position. And even in that, Mickey, you're not looking at doing a 40 delta contract. You're looking at saying, okay, and it's because of the analysis why you do this, but you come out here and you say, okay, let me go out to 43 days. And yes, you can work in weeklies in GDX. There's nothing wrong with that. Weeklies in GDX is fine. Once again, one of the reasons why we love it. But when you're looking at 43 days out, a tackle 25 covered call, aggressive covered call would be this 38 delta contract for $96. That's what you would be looking at getting here. No, well, I said $95. That's what you would be looking at getting. Well, if you wanted to do the covered call, and again, let's say you own 1,000 shares, well, you might be better off saying, let me take half the cash flow for $45. Let me sell the 38 contract, because the amount of things that would have to happen for gold to get to 38 in the next 43 days, I just don't think it's going to happen. I just don't think it's going to happen. And so you just got too much to fight up against here, Mickey. Like, we could see it hitting resistance here and stabilizing. You're obviously going to have a battle here at the 200-day moving average. So if you come here and you say, let me sell that 38 delta contract, the 36 strike price, I can see a ton of scenarios where 36 is hit in the next 43 days. Where you're going to have a management decision. And quite frankly, Mickey, I don't think you want to get called out at 36 right underneath the 200-day moving average at 37. And so I don't think that's the case. And so when we're talking about the covered call, when to write the covered call, when to open up that risk graph and leave it open-ended, I think this is one of those environments where you want to take on the risk to a certain extent. If you do look to cover, you look to cover a ratioed percentage of your net position, and you do so with a very conservative delta, making sure that you are up above any resistance channel so you don't get your gold taken away from you. And the reason I say that, Mickey, is because of the same conversation I had with my son and my daughter last night about holding periods. And one of the biggest mistakes that all of us traders make is we get called out on our covered calls, and we love the position. We get called out, we stop thinking about it, and all of a sudden it's up 10, 20, 30%. I remember the last time, it wasn't the last time, but the story I was telling them was my first trade on Tesla. In my first trade on Tesla, I bought Tesla for $38 a share. I sold it for $40 a share. And my son, and I said, Tanya, how much money did I leave on the table if I just would have held till today? And guys, it's millions and millions and millions of dollars. And my son is like, oh my goodness, that's just crazy. What's wrong with you? What's wrong with you? And I said, what are you talking about? I sold the 40 call option. I gave somebody the opportunity to buy the stock for me at 40, and they did so. I didn't have a chance to buy it again until it was $130 a share, because it broke out and went to $130 a share. And so you don't want to have those stories simply because you were a little bit too aggressive in your covered calls. There are times to leave that open-ended. And what I didn't tell my son Tanyan on that Tesla story was Tesla was forming a high base breakout pattern in a good bullish uptrend, and I just wasn't familiar with all that stuff yet. I like gold here. I'm perfectly fine covering gold because it's gold and it doesn't move very aggressively, but I like it. I like a ratio here if you do it, and I like it above that 200-day moving average if it's done as well. And I hope, Mickey, that the detail there helps you out.
Yeah, I love it. And, we all have those stories, by the way, where we gave one of our stocks back to the market.
Listen, I don't want to get called out on GDX at 36 in front of inflation. Okay. Let me just put it like that.
That's fair. That's fair. And the chat is blowing up here today. I'm loving it here, guys.
I do not want to get called out at 36 on gold. No.
Yeah. And I answered one of Leslie's questions. I'll just repeat it here, though. She's asking, is GDX a great place to start in the metals market if you're new to investing in precious metals? And it's a wonderful place to start. Liquidity, the whole thing, price tag, you name it.
Honestly, GDX is probably the number one start for people in commodity ETFs.
Yep.
I would say SLV is up there. USO is up there. Not as much anymore after the last year in USO, at least for me. I never even analyze USO anymore.
Yeah, no, I don't trade USO at all. All right, love the analysis here around the gold markets. Obviously, the breakout in the underlying GC contract is getting us interested. We've been talking about it for weeks. Matt, appreciate all of the insight there. Just a couple of quick corporate items here today, guys. I wanted to go through nothing too crazy. Actually, it's kind of a light news day, light news week, as we're anticipating things to get kicked into gear a little bit more as we approach earnings season here in about 10 days or so. We'll be doing a lot more of those stories. Two quick ones, Matt. Constellation Brands, ETZ. They beat, but they did we don't know about the future thing, and they lowered their guidance for sales. STZ gapped back into its price range here after their earnings report last night, reporting $1.82 EPS on revenue of $2.1 billion, above all the expectations. But the market didn't like it enough with their lowered projections. They didn't say enough to get people inspired. Matt, there's nothing in that chart that really grabs my attention now. Stuck between 210 and 240, and STZ is a good company. When it does want to perform. Anything you've seen there in the chart?
No.
Yeah, me neither. Conagra CAG, next one, quick, food company here, Marky, one that I know that you track. A little pullback into its moving averages. They also reported earnings, did not inspire. Obviously, they make like the Duncan Hines ketchup and the Bird's Eye and all those type of things. They were a penny above expectations. The market came down, didn't do much. Mark, do you have any interest in Conagra?
Not really. I mean, I just love we're gonna see this earnings season. To me, is really, really interesting. And boy, companies better have some nice things to say. Their earnings are going to be cute. they better have some nice things to say about the future. And just a reminder that earnings season this season, tread carefully out there with that.
Yeah, yeah. All right, a couple last ones here, real quick ones. Costco next actually did report some pretty good numbers. They do their pre-sales numbers. They do it every single month. They said same store sales for Costco were up 16% in March. Online sales were up 57% on a year-over-year basis. They reported that they're looking at forward projections that are looking good. They're up from, their revenue was up during the month as well. Take a look at Costco, Matt. We've been all over some of these consumer staple type companies. Costco was a leader in this recovery from that perspective, coming back up off the lows over the last several months. Let's take a look at COST if we can. Pretty good numbers here, Mark. It's really, really stretched from a short-term perspective. I still believe there's all kinds of opportunity in Costco and Walmart and Staples in general. What's your read on the chart here,
I mean,
Matt?
Costco is one of those
Mark,
investment type companies, right? It's a great company. I mean, those numbers are outstanding. I saw those numbers this morning. They're just absolutely outstanding. And I do love that Costco reports their same store sales every month. I love information. Who doesn't love information from an investing standpoint? So whenever you have a great company, I don't care if it's Apple or Facebook, there's always trades that can be made, and you need to, have technical analysis. But when you're looking for those investing entry points, you want to find a good one. But the next trade on Costco, I mean, that's been a great run. And I can tell you right now, coaches at tackle training, give me a week off, right? Consolidate, let those moving averages catch up. Give me a clear resistance level. Boy, that would be nice. You don't always get what you want, but that's what I'm looking for personally.
Mm-hmm.
Yeah, my technical read's very simple, Tim. If anybody tried to bring this to the scouting report meeting tomorrow, it'd be vetoed in a heartbeat. You're overextended, coming into a ton of chop of resistance between 370 and 388. It's got some work to do to set up. You gotta love the momentum in Costco recently. You gotta love the snap back. It's certainly been a leader. It was leading even the Walmart chart there, and so you gotta appreciate. You gotta like the V shape. But at this point, it's got to cook, and it's got to have some time. And Mark's 100% right. Almost every coach at tackle trading would say the exact same thing. Mm-hmm. Love the momentum. Love the V shaped. It's got to cook a little bit. Let those moving averages catch up.
Mm-hmm. Yeah, I'm with you. Yeah, it would be a veto in the short term, but would either of you be surprised in 2-3 months by the time we're having earnings conversation with Costco, it's up in the 370, 380 pushing resistance as these trends develop?
But I could also see some violence scenarios on Wix getting stopped out many times. And so it's not the fact that you think it's going to go up. I certainly think we're going to ding 380 before earnings. But as a trader, I also don't want to get stopped out every single time.
Mm-hmm. Mm-hmm. Yeah,
and so it's just a matter of letting the technical set up. That's all it is. It's not a negative thing against Costco. Yeah. It's a negative thing against the traders who trade Costco overextended.
Mm-hmm. And outside of this one, Amazon is having their union vote. We'll know more about that sometime today. We'll probably talk more
Amazon
about it
has
tomorrow.
a union?
In Alabama, they got a bunch of workers that are voting to unionize. We don't know the total of the vote. We don't know what the implication is one way or the other, but that is all over the news headlines last day.
I kind of feel like this is an Office episode.
Where Daryl? Is it Daryl?
It's Daryl. It's Daryl. Daryl's in the Amazon warehouse right now, leading the charge. Let's unionize.
Yeah. If we get clarity on this, we'll probably talk a little bit more about it tomorrow.
Is that the Apple chart in 3 days?
Probably. Yes.
Yeah, probably.
Yeah, it looks a lot like you go back 3 days ago, that looks a lot like the Apple chart today. And
Apple's not leading the FANG. It's playing catch up to the FANG.
Yeah, Microsoft, Google, those ones are leading the FANG, absolutely. And then last here, guys, I just want to do a quick rapid fire. I don't need to go through all of these picks. I want you to tell me what it means when Wall Street does this, because we didn't get a lot of typical upgrade downgrades today. We got that old reiterated, kind of thing where it's like, oh yeah, reminder, we still like this company. So listen to these names. Morgan Stanley reiterated Microsoft as a top pick. Bank of America named Salesforce a top pick. Bank of America reiterated Uber a top pick. Deutsche Bank reiterated Roku a top pick. Argus reiterated Amazon a top pick. like there's a
Yeah,
coordinated.
it's the
type
FOMO
of thing.
yeah, no, it's a FOMO in well-known tech names. It's like, hey, yeah, no, it's look at me. Remember, we like these companies even though we haven't talked about them in 7 months.
I want to name drop here to get in front of it and make sure
Oh,
they
what are they all? What are
It's
they all
FOMO name
upgrading?
dropping.
They're
they
all
weren't
okay.
they weren't even
okay.
upgrades. They're just
Hey, tackle
reiterating.
trading is upgrading gold. There you go.
We reiterate our stance on gold. We reiterate our stance on
I'm going to
Bitcoin.
reiterate my stance on gold for the last 10 years right now. Make it a major news day.
Yeah, that's right. That's right. All right, guys, that is our show here on a Thursday. Let's start moving into final thoughts. Oh, actually, no. Real quick, I did promise the chat. There was a couple requests earlier for 2 quick chart reads in that, if we can, from some of our veterans, Oracle and Vail. I don't remember the names of who requested them. Have to go back
Jonathan
and dig
did Vail.
Did he? So
At least that's what you said.
Vail and Oracle. So Jonathan, here's let's do Oracle first. I'll go back and look and see who it was, but let's read on Oracle real quick.
Oracle's got a tremendous amount of momentum behind it, no doubt there. You got to love that momentum. You're also forming a little bit of a high base type scenario breakout, but again, when you're looking at the high base, what you're really waiting for, because we don't love 2-day hesitation breakouts. Like that's just never going to get anybody excited. What gets people excited is 4-day hesitation breakouts when that 9 EMA catches up to it. And so a lot of momentum, and you could certainly momentum trade where you're triggering above the high, stop loss underneath the low, and then you adjust that stop loss over time as the momentum continues. There's no, like momentum trading is fine, but there's no standard step system swing trade here. It just enjoy the momentum if you're in it.
No, and Oracle's had a few of these burst, right? And they haven't been sustained. So stock's personality seems off to just blindly chase momentum. Wait for the setup.
Well, and yeah, but Oracle's it's a beautiful, beautiful beast. It's just a matter of being patient as things get overextended. That's it.
Yeah, patient.
I don't think people have concerns about Oracle at all.
It's just same thing with Costco, right? It's like,
yeah.
Listen, and we've learned these lessons. Let's not forget the lessons we've learned in the last few months. When things get overextended, this isn't 2020, where things are likely just to go rip roar to the stratosphere. You're likely going to have time to be patient, wait for setups, high bases will form. Patient traders are going to be really rewarded.
Well, and honestly, I do like the breakout of 75 here on Oracle. I do think it's tradable from a momentum perspective. Stop would be underneath 74. But again, and I look at this space. This is a software company in the tech space, and quite frankly, outside of Microsoft, and I'd even put Oracle up there from a trending perspective. Like it's up there with the highest quality of stocks in this space.
Yeah, and by the way,
I'll give you, if I gave you a list of the 98 stocks in the software space, you would have Oracle in the top 5 from a trend pattern and consistency perspective right now.
Well, and when you went to the weekly chart, I saw increasing momentum in the long-term trend as well.
Although Mark, but Mark hates high bases. He hates it. So Mark, maybe I can give you a different company in this space. Maybe I could. What, your appetite a little bit? What do you think of a little W formation?
That's actually that's not
I
shabby.
just saw it. I was looking at the other stocks in the space and I just saw it quickly. It's got a pretty consistent 130, 140 consolidation, W break, played to 150, but
no, I mean, and Bears had 3 weeks in the height of the craziness, bond yields and Archegos and everything. Splunk held that 130 support level.
Oh, see, now I'm in bird dog moment. Like I started looking at charts.
Clear resistance here. You're clearing the 20.
Here's Dropbox, guys. We haven't talked about Dropbox in a long time.
Moving averages are starting to up. So that Splunk chart looks like a nice, reasonable.
The Splunk chart looks like a decent reversal. What about Dropbox on the breakout?
I hate this company.
I know you hate it.
put files in their folder. How is this the next
Mark,
evolutionary
do I have to
aspect
explain
of,
the cloud to a 50-year-old?
you know, like, listen, like, yeah, but like,
Okay,
I can get that service for free in
have
so
you-
many places. I've always hated the Dropbox business model.
So why does
dude,
Amazon's
don't-
cloud service make
You're
money?
so old.
Because Amazon
You're
does
so
everything.
old.
Exactly. That's why Amazon does it. Is why I don't like Dropbox.
Every other
literally Amazon's growth is cloud.
Anybody can start a Dropbox.
give me a 5-year
Dude,
weekly on this chart. No, I'm
don't
going
be
to fight this one.
anti-cloud.
I'll
Don't be
fight this one.
Don't be anti-cloud.
Give me a
Don't be the
long-term
dude
chart.
that's like, I don't know what the cloud is.
Marky, can I at least have us look at the long term and think about this? We're talking about an IPO company from a few years ago that took several years off, moved into a consolidation that's now finally kicking into gear from a trend perspective. You know,
So yeah, so I've hated this business model, and it's still at below its IPO price because
all
the
right.
business model stinks.
Facebook was below its IPO price for a long time.
Yeah, but listen, no.
How does a business model stink? Storing files and charging
Because
people to
any
do it.
I'm
seems
sorry,
like
the business
Amazon,
model
anyone can
doesn't
do it.
stink.
Good business
It doesn't
model.
stink.
And Dropbox
They
as
got
a
no
brand,
moat.
they
have
the,
no
the
moat.
brand around
Okay,
Dropbox is
Mark.
impressive.
When you go and watch something on Netflix later today, okay, that nice little video you're watching, it's got to be stored somewhere.
I know, but
The
that's
same
the thing,
way
they
I have
no
to
moat.
store my lawnmower in somewhere.
Any big tech company, like, no, they have no moat. They have no moat. What stands out
He's
Dropbox
not
from any other
wrong on the
service?
moat.
Plenty
He's
of
not
people can
wrong on the
participate.
moat.
There's enough room in the bigger moat for them all to jump in and have a nice little swim.
Anyways,
I'll tell you that. There's plenty of room.
You know, I look forward to the conversation 4 years from now when Dropbox is still at $28.
I'll write cover calls against it for 4 years then.
Oh my goodness.
We're at the point where nobody wins this argument.
By the way, if that's what you think is going to happen, this should be your kind of company for cash flow.
It should.
Yeah, and if it ever
Dude,
gets down
can
to
we
$6,
just agree that
then
he doesn't like using Dropbox?
He just
Like,
hates
this
I
is
do
Dropbox.
not
all
like this company.
is.
Never have. I will,
This
you
is
know.
all this is. It's nothing to do with the cloud. It
I
has
can write
everything to do
cover
with-
calls on anything. Why would I do it on this?
The only thing this has anything to do with is, hey, Mark, can you go get that PowerPoint out of Dropbox? And Mark's like, I don't know how to use Dropbox. That's all this is.
Yeah, I get it. I'm
Yeah.
within 2% of my free storage limit, Dropbox, but I'm not paying you any money.
Now we know what's going on.
We got it.
We got it.
I love it. I love it. I love it. I love it. And
Hey, you talk long enough, Tim. You figure it out every now and then.
I did promise Jonathan Vail when we were talking metals. I did back. It was Jonathan that asked about Vail, a Brazilian company, and actually a mining company here. They don't do just gold or silver. They do a lot of other types of metals, is what I'm reading. Nickel is one of them. Aluminum, bunch of different stuff. It looks like iron ore, those type of things. Matt, read on Vail, last one, and then we'll wrap.
You know, and looking at Vail here, obviously an outperformer against almost every other metal. I am not that familiar with the breakdown of their metals and what goes into it, but it does seem like it is not just pure gold or everything. Silver. They do look like they have some platinum,
I actually
palladium, and everything in them.
Yeah, I actually literally think I saw a note this morning that Vail was talking about their lithium mining and how that's picking up. They do everything.
Yeah, it would seem they probably have more in that than in, say, gold.
Mm-hmm.
So I wouldn't call this gold, but in looking at we're talking about an actually very, very big company here. This is a massive Brazilian mining company. It's not one of those small cap stocks. Obviously an outperformer here. You're looking at this from a weekly perspective. The daily charts are really kind of a choppy mess here. You clean that up by going to a weekly chart, and you're going to see a very, very, very important support level right at 16. Obviously 19 would be a new trigger on appreciation. If you're looking at this and you're already in it, you're in celebration mode and basically just saying, as long as it stays above 16, I could care less. When you're looking at it from a fundamental perspective, like, this is not an overvalued jug, not in any capacity. You're talking about a stock with a 20 P ratio, forward P ratio is 6.5. Its price to book ratio is 2.9. These are tackle 25 type numbers, quite frankly. And so when you're looking at this, you got a fundamental, at least a fundamental company that you can trust. You're looking at it saying above 19, we're celebrating. Under 16, we're probably managing the position underneath 16. And you're saying anything above 16 is just gravy train. But fundamentally, there's nothing here to be concerned about, quite frankly, like nothing. I would have to look at the percentage of what they do from a mining perspective and to really give a fundamental take on it. But looking at the raw numbers, there's nothing in the raw numbers that I'm like, concerned about. You're talking about literally a $97 billion company with a dividend that pays out at 6.38%. Like that's a good dividend. Again, I'd have to look at the company a little bit more detailed to have a fundamental take on it, but the raw numbers look fine.
Yeah, and Jonathan, I do think they do nickel, but I don't think they just do nickel. I'm looking at the prospectus. They do copper, gold, silver, cobalt, all kinds of
I'm sure
stuff.
they have a kicker on everything.
Yeah.
They're a massive company. It's just a matter of what they do the most of. But technically, you're looking at a scenario where you're saying if you're not in it, you're looking at 19 and you're saying just give me till Monday. Like give me till Tuesday, give me till sometime next week. Let me consolidate just a little bit, high base, give you a breakout of 19. That 19 trigger's really clean here, guys.
I agree.
The only problem is you just ran from 16. And so do we really expect it to run above 19 to 20, to 21, 22? Probably not. After a high base, you can get there. After consolidation, you can get there. But it would be guys, you're talking about a repeat of November to January of it going to 22 from 16. So I just don't think that happens. Let's see some consolidation. A trigger above 19 makes a lot of sense after consolidation.
Yeah, I would. I think that technically would set up very, very well. Most coaches would be the same
Good find,
thing.
Jonathan.
Like, and so if this was the kind of thing tomorrow we do our scouting report, like Matt talked about,
It'd get vetoed.
It would get vetoed today because we would want some.
I'll
price.
tell you exactly what would happen. Exactly what happened. Frank would be like, "No, I'm too overextended coming in a breakout. I'll take it for Twitter and we'll talk about it next week."
That's right.
That's exactly what would happen. That would be the length of the conversation, and everybody would know what that meant. What that meant was overextended coming into a great potential breakout, but it needs to get into the cooker, cook a little bit, and then let's break out. It's a good find, good trigger, just needs to consolidate a little bit.
I love it. Guys out there, appreciate the conversation here today. The chat was on fire. I appreciate that as always. And you guys are amazing. If you've not done it yet, subscribe, click the bell. In fact, Jonathan says he's a new member of our community. So he just barely did subscribe. Wonderful to have you, Jonathan. We do this kind of analysis on a daily basis. My old man, Max, my German Shepherd boxer, is standing up next to me, and he never does that unless he's got to get outside. So we're going to start wrapping this show. Matt, final thoughts from you, sir? Anything?
Oh, awesome. Love the chat being active today. Love the super chat. You guys are fantastic. Love tackle trading, and thank you for coming out on a daily basis and hanging out with us in the halftime with the halftime crew. Tonight, I believe we have Cash Flow Club. Correct, for the pro members of Tackle Train. So get excited for the Cash Flow Club. Mark, who's teaching Cash Flow Club tonight?
Greg Holmes is tonight.
Greg Holmes is teaching Cash Flow Club
Gino and
tonight.
Tyler have been on vacation all week, and Greg has been a rock star.
Greg has been holding down the fort this week. Thank you, Greg. Everybody will be back next week. What is this vacation stuff?
Yeah, who gets vacations? Come on.
I got to talk to
warm,
Frank
people,
and Tyler. Seriously.
Yeah. Weather turns warm, people get
Tyler
foggy.
can take 2 vacations in a month. What is this?
You know exactly what happened there. You know exactly what happened there. Yeah, enjoy it, Coach Tyler. Took a little buddy vacation, played golf. Then he had to take the family because they were all jealous of the buddy vacation. So that's where you get 2 vacations in a month. Maybe I should do that. You and I, let's go play golf, and then we'll take our
You
family.
go on your buddy vacation. The wife's looking at you being like, really?
Yeah.
Really? You think you're going to have some fun and you're not going to make the family have some fun? We know how it goes.
That's right. All right, guys, we're out for today. We'll see everybody back tomorrow, same time, same station. Coach Frank will be here like he is always on Friday. Join us here on the halftime show. We'll see you then. We're out.